You are not a homeowner, you're a land renter. So what I mean by that is even when the house is paid off in the vast majority of countries, you have to pay property tax, right? So you paid off your house. If you don't pay your property taxes, what do you think happens to the home? Why I think we're going to hold that 100K line now is because BlackRock, Fidelity, Strategy, they are creating a fundamentally different investor base. And when I say an investor base, we have to think of it that exact way. What is the basis of the price action that we've been seeing in the last over a year now since the ETFs have been approved? That's the Max Payne scenario. That Bitcoin will go to 150, then down to 130, then 160, then down to 140, then 170, down to 150, and just keep doing that for like years. That will shake a lot of people out of the market. If I had known then what I know now, I would have sold my clothes. I would have sold my car. I would have eaten nothing but ramen noodles for 10 years and done nothing but buy Bitcoin.
Hey guys, welcome back to the show. Today I'm here with Adrian, which is Bitcoiner, MSTR investor, and member of the MSTR True North. How are you doing today?
I'm doing great. I'm happy to be here. I'm happy to be on the show. I've seen some of your episodes. I like your format, so I'm hoping this is going to be just as good of a conversation as you've had with others.
Fantastic. Thank you so much. I'm super excited as well, by the way. But for those people that don't know you, do you mind to give us an intro and tell us a little bit about yourself?
Oh, sure. So I got into Bitcoin in 2012. I've given my story a few times, but let's just say that I kind of lucked into Bitcoin. Someone that I knew in college was a early Bitcoin adopter. He did mining. He did he created his own entire setup in his house, and I just happened to be in the right place at the right time and ran into him again and started talking about it. I wish I could say rather that I was fully orange pilled from that moment. I wasn't. I did have Bitcoin then. I still have some of the Bitcoin I had from then. I don't have nearly as much as I should if I had really dedicated myself to understanding what it was. So I've seen the market gyrations, I've seen the ups and downs. I've gone through quite a few different stormy events in Bitcoin. So I'm a pretty seasoned believer in Bitcoin at this point. Bitcoin has allowed me a level of freedom in my life that I'm very, very grateful for. Bitcoin has also led me to MSTR as an investment vehicle, and ironically enough, Bitcoin has allowed me to learn far more about financial markets, and it's allowed me to broaden my investment portfolio in the sense that I'm now also a fairly big believer, bull, and investor in AI. That's me in a nutshell. I still have my day job, not necessarily because I need it for financial means, more so that I'm trying to keep myself going. I think that someone needs a purpose in life. And until I find a purpose that allows me to move fully away from what I do day to day, I think I'm going to just keep doing that. I don't see myself as being a full time podcaster. You're more patient than I am to do it, I think. But I do see myself as someone that wants to, put himself out there a little bit more. And that's what I've been doing in the last year. And I'm sorry, that's a very, very long answer.
No, it was perfect. And by the way, that's how I saw your story, and I'm so glad you've done it. It's fascinating when I speak to OG like yourself, and they're saying, oh, 2012, 2013, the early days of Bitcoin, and everyone is watching and they're thinking, oh, man, I wish I could have. They have no idea what we've gone through. Right? I mean, it looks glamorous on paper, but oh boy, we've seen some serious corrections in our way. We were discussing off camera. Now we've seen 12%, and people are freaking out.
Yeah, it's so I think that happens, and I don't like using the term cycle anymore, right? Because I don't think that I've been developing this thesis over the last year. I don't think that Bitcoin's been following cycles, and we can get into that a little bit later. But when I got in to Bitcoin, I thought it was cool. I thought it was a potential investment that can be like an edge investment that would be able to have a disproportionate return. The people I talked to back then, they are the true early adopters, right? Because someone that just had some Bitcoin in 2012, they're an early adopter versus someone that actually put money into Bitcoin mining and saw it that far in advance and really wanted to get on the ground level. I consider them the early adopters. I just see myself as a guy that was in the right place at the right time. Because I wish I can say I was so smart that I saw it coming. I didn't. I was just in the right place at the right time. And the reason why I mention all that is if I had known then what I know now, I would have sold my clothes. I would have sold my car. I would have eaten nothing but ramen noodles for 10 years and done nothing but buy Bitcoin if I had known then what I know now. So people that say that, oh, I wish I'd gotten in early, it's like, yeah, that would have been great and all, but would you have held? Because I didn't. I've sent Bitcoin to the wrong address. I've spent Bitcoin and rather sold Bitcoin when I shouldn't have. It's not just a matter of, oh, if I was there, I would have done differently. You wouldn't have. You would have had to go through the same learning curve that every single Bitcoiner has had to go through. Not everyone had the vision, like Adam Back, for instance, right? He was directly quoted by Satoshi himself or themselves. So he's a unique case, right? He's a guy that held from the beginning and still has his Bitcoin probably from the beginning. 99.9999999% of people would not do that. So it's not just a matter of being an early adopter. With regards to the price, we were at, what was it, 124? We've seen like a 10-12% correction. That's nothing. But people are acting like the world is over, right? And I think a lot of what you're seeing is, and again, I hate using the term cycle, but every cycle, every 4 years, we have a new crop that comes in, right? And they see the corrections, they hear what happened in previous cycles, and when it doesn't go that way exactly, they get demoralized, they get scared, they get very vocal online, and that's all we're seeing right now, is what I think. And what's funny about it is you have a lot of new adopters right now that have a lot of money. So you have a lot of new adopters that are on TV that are talking about Bitcoin in a very, very bullish sense, but I've seen a few that are saying that, oh, this 10% correction maybe could be a sign of the market cooling off and that Bitcoin might go down further. So it's the same narratives, just being spun by different people. And I just see it all as par for the course.
I completely agree in everything you said, by the way. I had the pleasure interviewing Adam back in Amsterdam last year, and it was incredible. He's such a cool man. Honestly, I had the best time of my life. And then the rain started to pour down, so we had to stop the interview. But and me, like you, I'm never gonna hide it. I had no idea what I was doing. I saw an opportunity to make money. That's it. Because for me, and again, I was thinking fiat, right? So now Bitcoin is money now in 2025, but in 2013, I was thinking, oh, we're going to make more British pounds because I was living in London. And I had no intention in holding. I had no idea what I was doing. You touch on the price, which is super interesting. Also, seasonality has to be mentioned. August and September are never great months. I don't even try to guess the price. It's pointless. It's going up. That's all that matters. But do you think we can hold the 100K line?
Yeah, I think there's a few things going on. So I actually did a post. It's funny you mentioned the seasonality. I did a post end of July saying that statistically, August and September favor a pullback for Bitcoin. And people pointed out that, well, in post halving years, August and September are typically green. And my caveat to that was 2 points. One, statistically, the trend is still that August and September are more likely to pull back than continue a green trend. Just overall, if you look at all of the August and September since the seasonality has been tracked, and two, this cycle is not playing out as others have, right? In no previous cycle did we have an all-time high before the halving. In no previous cycle did we have institutional adoption from BlackRock, Fidelity, et cetera, so on and so forth. And in no previous cycle did we have corporate adoption to the level that we have right now with Strategy and Metaplanet and Semler Scientific, Smarter Web, Capital, all these other corporations that have been buying up Bitcoin. We haven't had that before. So I think we're seeing a few things playing out. Bitcoin is turning into truly a mature asset and it's going through the maturation phase. And I want to make sure that I draw the distinction between those two. An easy corollary is gold. Gold is a mature asset. Bitcoin is a maturing asset. And what we're seeing right now is that maturation phase. And what do I mean by that? Well, I'm a person, and I think I'm one of the only people that's saying this, if not the only person that's saying this. I, for this specific reason, I don't think that previous Bitcoin cycles have followed because of the halving or have followed because of liquidity. I think previous Bitcoin cycles have been driven by stimulus. If we take a look at the inception of Bitcoin from 2009 all the way to 2022, what did we have happen in those events? We had the great financial crisis, the whole subprime mortgage meltdown, and the chaos that it caused for many, many years after. All of the stimulus that was injected into the market because of that, on the order of 7 trillion, if not more. Then we had, because I used to know the numbers off the top of my head, so I'm giving ballparks. Then we had COVID. and all the stimulus that came from COVID. So between 2009 and 2022, we had QE1, QE2, QE3. So that's quantitative easing 1, 2, and 3. And all the stimulus that went into the market from America alone was to the order of several trillion dollars. Then you had the ECB, the Japanese bank, all of the global banks pumping liquidity into the market as well, to the order of trillions of dollars in total. Then we had COVID, which created another stimulus cycle to the order of trillions of dollars. So I think that the figure is somewhere between 7 and 10 trillion that was injected into global markets. And the distinction I like to create to have there is that liquidity seeks quality while stimulus seeks speculation. And the reason why I'm drawing a distinction between liquidity and stimulus is that liquidity comes from what we saw in the past with lower interest rates, creating a lower cost to borrow that facilitates money coming into the market. Stimulus is direct government intervention, pumping and printing money into the markets to stimulate the markets. Now, stimulus does bring liquidity, but it's not the same thing. It is a massive influx of liquidity very, very suddenly. And that creates a highly speculative environment. So while in the past Bitcoin may have had gyrations that lined up with global liquidity, I think it's more due to the fact that there was stimulative effects in the global economy at that time that was creating those liquidity correlations. And that is why I think we had the boom bust cycles of the past. And I'm sure you know the story, right? You've been here a while. People go into Bitcoin, Bitcoin runs up, they think that we've hit a local top, they run into altcoins run up further because they have a smaller market cap. All of this is very, very sentiment driven. And then what happens? Everyone leaves altcoins, the entire market crashes, bear market happens, right? Why I think we're going to hold that 100K line now is because BlackRock, Fidelity, Strategy, they are creating a fundamentally different investor base. And when I say an investor base, we have to think of it that exact way. What is the basis of the price action that we've been seeing in the last over a year now since the ETFs have been approved? I think it's institutional and corporate adoption. I don't think it's retail. In my view, a retail investor is not someone that has $10 million that they invest in Bitcoin. That is a retail investor, but it's not retail that drives mania like they're talking about in the sense of when we saw the altcoin runs and all the meme coin runs. That's retail. That's when you're seeing guys on TikTok and Twitter and Instagram talking about dog with hat or soup coin or whatever other random coin that they have, right? That's retail. What we're seeing right now is a fundamentally different investor base. We're seeing retail involvement, but at a different income bracket and at a different level altogether. So that is creating a new investor base. And that is why, if you take a look at what's happened since the ETFs got approved, we went to 70, we went to 80, we went to 90, we went to 100, and now we've been trending at 100 right now for a very, very long time. What that tells me is that, or what that leads me to assume rather, is that because we have a different investor base, that is a different investor profile. And they are not the investors that are likely to rotate from Bitcoin into further out on the risk curve altcoins. They may rotate into Ethereum, which is why we're seeing the Ethereum run up right now, because Ethereum, whether Bitcoiners want to accept it or not, is no longer an altcoin really. It is now in an ETF. Is now in several ETFs. It has now been given a stamp of approval by BlackRock and by Fidelity. That changes its profile somewhat. And now we have, the Genius Act, and now we have the narrative around stablecoins that's creating interest around Ethereum. But does that invalidate the investment thesis of Bitcoin? No, that just means that we now have a different investor base that's perhaps seeing Bitcoin and Ethereum as very, very different asset classes. They're seeing them as digital assets, but they're no longer seeing them in the same light that they see crypto. So, at a very, very basic level, what do we have? We have a different investor profile, we have a different investor base, we have an environment where it is not seeking stimulus seeking speculation, it's liquidity seeking quality, which is why even in a relatively higher interest rate environment, we have still seen Bitcoin run up. We are still seeing Ethereum run up. And now, with interest rates perhaps being cut in September, we can end the year on a much higher run up into higher numbers. Do I think that means a $500,000? No. Do I think that means that Bitcoin and Ethereum are probably going to outperform into the end of the year? Yes. And I'm sorry, that was a very long answer.
It was beautiful, by the way. You said so many interesting things here. I wanted to ask you about September 16 and 17, I think it is. If I'm not mistaken, during COVID, by the way, 60% of the supply of the dollar was printed. This is insane. When I think about this, it just blows my mind away because 60% of the entire dollars in circulation was literally printed in such a small time frame is nuts. And I wanted to ask you about September 16 and 17 because I also believe Powell has to cut. I mean, it doesn't have to, but likely is going to cut, maybe multiple times from now until the end of the year. Let's say it's 2% or 3%, whatever the number they say, which is not in my book, is way more, but whatever.
I agree. It is definitely not 2 or 3%, but yeah.
Exactly. It's more likely 8, right? Maybe 8, 9 or something. But if that happens, or when, more than if that happens, I'm expecting a price appreciation. And with these type of investors, ETFs, countries, I mean, we have Bukele, we have Michael Saylor, we have Bhutan, those players, they're not going to sell for a 20%. But when it comes to inflow and ETFs, are you expecting, because I mean, IBIT has gone bananas, like the most successful ETF launch of
In history.
Exactly. Are you expecting it to grow still aggressively, or you think it's going to stall and then potentially decline a bit?
Well, yeah. So coming back to the point I made about stimulus versus liquidity, and the point you raised about the degenerate retail investor, right? The reason why Bitcoin ran up so violently in the past is because of many of the things you just highlighted. So we had a smaller market cap, therefore it took less money to move the market cap. Therefore, in a highly speculative environment, that's why you saw insane run-ups. But if you notice, and this is not me leading any credence towards the diminishing returns argument, but if you just notice that as Bitcoin's market cap grew, the run-ups became less violent and the overall market cap tended to stabilize, right? We stabilized at certain levels market cap wise. So as an asset grows, if you take a look at a variety of different assets and even commodities, they do experience run-ups, then they stabilize at a certain market cap. Then they experience another run-up, then they stabilize, and they experience another, and then they stabilize. They don't become more volatile as the market cap grows. As the market cap grows and then it stabilizes at a certain point, then grows again, they become less volatile. And that's what's happened with Bitcoin since the ETFs have launched. The Bitcoin volatility ratio has been going steadily down ever since the ETFs launched. Now, people think that's a bad thing. It's not. The only way we get hyper Bitcoinization, which I actually don't think is possible, but let's say that we use that as an argument, the only way we get hyper Bitcoinization is with a stable asset. We're not going to get the world adopting Bitcoin if it's prone to crash 80%. So the stability, the decrease in volatility is actually very, very advantageous for Bitcoin long term. Now, how does that play into the price action? Well, if my overall thesis, my overall hypothesis is correct, what that means is the institutional profile of Bitcoin, or rather the investor profile of Bitcoin, is very, very different now because of institutions and because of corporations. And if we just, again, use gold as a corollary, what happened when the gold ETF launched? It experienced a run up over the course of, and please don't quote me on this, I think between 6 and 7 years before it reached a new price point and stabilized, and then it's experienced run-ups since then for various reasons. I call this scenario the stairway to heaven. And the reason why I call it that is because I personally think that we're going to see a run-up into Q4. It's going to correct. I don't think it's going to correct 80%. I think that 20, 30, 40, sure. But I don't think we're going to see an 80% drawdown, right? I'll be even shocked if we see a 50% drawdown where we go to 200,000 and then crash to 100, unless there's some broader macroeconomic event. And that's the caveat, right? If we have World War III breaking out, that's not a correction because of Bitcoin's cycle. That's a correction because we had World War III. And I think people make a lot of correlations between events when we see corrections as if, oh, see, Bitcoin's following the cycle, instead of taking a broader look at the market. But that's just a little segue. So let's say that we don't have any terrible black swan like events that come along. So let's put those to the side. Just following this along, if we have a different investor profile, if we have a different investor base, we have institutional adoption, we have corporate adoption, my feeling and my analysis tells me that it's more likely that we're going to see some corrections, but we're going to correct, we're going to consolidate, and then we're going to follow a pattern of slow accumulation. where Bitcoin just goes up and to the right over the course of the next 10 to 15 years. That means, however, that we're not going to see Bitcoin go from 100,000 to 500,000 and then down to 115,000 and then to 600,000 and so on and so forth. We will probably see Bitcoin go from 150 to 200 in that range, then correct and then go from 175 to 225, and it's going to do a stair step to heaven over the course of the next 10 to 15 years. I think that is a more likely scenario than the boom bust cycle we've seen in the past, because in my view, the boom bust cycle has not been liquidity related, it has not been halving related, it has not been cycle related, it has been stimulus related. And we do not currently exist in a stimulative environment. That's just my overall thesis. Now, if they start the money printer back on, all bets are off and the fun starts all over again. But I don't think that can happen until 2026, 2027, probably. So will we see an 80% drawdown in 2026? I don't think so.
Usually the market like to punish the majority of the participants, right? And now whoever has been invested in Bitcoin the longest is probably kind of expecting some sort of a seasonality or whatever, cycles, label whatever you want. So I think there's going to be a lot of investors, they will take profit at the end of the year because they are going to think and or expect that this is it. Like the cycle is over, we're going to go into winter. Hence why the market is going to punish them, right? They're going to FOMO back into it, I believe, when the price is going to go higher than the price they sold. And it's then we will see a correction, maybe 40%. I'm with you, by the way. Volatility diminishes in both directions, right? So like you said so well, not just on the upside, but also on the downside. So maybe 50%, to be honest, it doesn't matter. But what it does matter, I agree with you, is the type of individuals that are now participating into this network. It's very different. Of course, retail is still present. They'll probably play with God knows what. We've seen the NFT extravaganza. We've now seen the meme. There's going to be something else, as always, to entertain and take the money away from people, because that's how it works. And that's why, staying in the market beats timing the market. I don't play cycles either. I don't just buy and resell. I just don't do any of that because that's not for me. I'm not a trader. I'm an investor, which means when I buy something, I don't want to sell it. That's the entire goal. And I wanted to ask you how you feel about MSTR, MicroStrategy, and all those treasury companies that we've seen now. I think also this is going to impact Bitcoin itself, because now people can participate to Bitcoin not just by buying the asset in cold storage or with self-custody, but they can participate through a third party like MicroStrategy or maybe an ETF. So are you expecting them to come in aggressively and start scooping up like crazy?
Yeah. So I want to come back and touch on one thing really quickly. The scenario we're discussing, ironically enough, how you said the market's going to punish participants, that's the Max Payne scenario for a lot of people. That Bitcoin will go to 150, then down to 130, then 160, then down to 140, then 170, down to 150, and just keep doing that for like years. That will shake a lot of people out of the market. And to your point, when someone sells in January when at 160 or something, thinking the market's over, then they see a correction and they're like, aha. Then come January next year, Bitcoin's at 170. They would have had to hold through a market gyration period of over a year to experience a $10,000 gain. And I think you're right that people are going to chase at various points. But how does that play into the broader dynamics with these treasury companies? I think what we're seeing right now is people forget when strategy started in 2020. It is not as if they were able to be aggressive in the initial days because Bitcoin's price was lower. Bitcoin's price is much higher right now. And the reason why strategy is the only really aggressive accumulator is because they have the market cap and the trading volume to justify those purchases. These smaller companies, they're going to get more aggressive over time, the ones that survive. People like to, criticize Michael Saylor, but they forget that since 2020, he experienced what I like to call the rehypothecation bubble in 2022 when FTX and BlockFi and Celsius and 3 Hours Capital, all of those companies started going under, and the massive crash that we saw. He's experienced that, and he didn't sell. Are these companies now going to experience something similar? I don't think so. Are they going to experience what I like to think of as their version of it, where Bitcoin's crabbing along and perhaps sentiment around their equity isn't as high and they're not able to buy as much Bitcoin as they would like? Yes. And I think that's going to test a lot of these companies. So, do I expect growth in Bitcoin treasury adoption by corporations? Absolutely. Do I think it's going to trail off a little bit? Yes. I think that what we saw initially was the impact of strategy on the market. Everyone saw what strategy did. Everyone started seeing that Bitcoin was, running up to 100,000 and just staying there. And everyone's assuming that we're going to see increased performance in Bitcoin in the future, which we are. So a lot of corporations adopted it, thinking to themselves, we can do a version of what Michael Saylor did. And in a way, they are right. But the reason why Michael Saylor was able to do that is not just because he bought Bitcoin, it's because he bought Bitcoin with a vision of using Bitcoin to grow his corporation. And I think what we're seeing right now is people trying to copy that, but the market, to use your phrase, may punish corporations that can't innovate. I don't know if the model that's going to persist 5 years from now is just copy Michael Saylor. They're going to have to come up with new ways to leverage Bitcoin. And I think strategy is going to have to come up with new ways to leverage their Bitcoin, in addition to the preferreds and whatnot. So, yes, I do anticipate growth, but I think that with any new paradigm, there's going to be growing pains. And with any new paradigm, there's going to be people that decide that this is not for us and decide to leave. I don't think that means failure. There are a lot of people saying that these corporations are going to fail. I don't think that they're necessarily going to fail. I think many may say, you know what, we were accumulating Bitcoin, it has served its purpose. We don't think this is our vision going forward. That does not mean they're going to sell all the Bitcoin on their balance sheet. So you may have corporations that are no longer active accumulators, but are holders long term. I think that that's a very likely model that we can see.
Going there and seeing there, it's a very different thing. Like, I can see where I'm going, but when I'm walking the path, it's very different. And some of the people and or companies, they know that this thing is volatile, and even 40% correct. We're now saying 40% like it's nothing because we've been here since forever. But in traditional finance, 40% is just a lot, right? Or if you are a gold
It'll
bug.
make corporations nervous. It will make them nervous. Yeah.
Exactly. So now they say, oh, we're going to hold forever. Okay, but once you are there and you see 40% correction, can you actually do it? Because I have friends, multiple friends, and I've been trying to orange pill them since forever. Yeah, no, I'm going to buy, I'm going to hold. It's a 20-year thing. And then it doubles and go, oh, I'm out. Dude, you just said that you wanted to stay in for 20 years. We've gone from $16,000 to 120 and you're out and you bought a house. Okay, I don't judge, I don't care. But it's just funny to witness. Temptation is going to come in. Say, hey, 100,000, 200,000, what do you want to do? Are you going to sell? Are you going to hold? And if you are a company, you might have stakeholders. They might put pressure. Hey, I want gains now in fiat because I invested so and it's time to do whatever. We've seen MetaPlanet and SmartWeb. We've seen many in different countries kind of wanting to become the MicroStrategy of the UK or whatever it might be. But for them, it's going to cost a lot more. Super interesting to see how Bitcoin is going to become a part of all those ecosystems, because now you will be able to choose what type of ownership would you like to have. And would you recommend, not necessarily recommend, but do you think it's a good play to, I don't even want to say diversify, but breaking your portfolio in different compartments for when it comes to Bitcoin, if it makes sense, like some sort of maybe an ETF position, maybe some MSTR?
So ironically enough, I didn't sell any Bitcoin whatsoever to buy strategy. What I did is I took out a loan against my Bitcoin, and that's how I bought strategy. So the accumulation of my Bitcoin has happened, of course, over the last since 2012, but and that's gone through fits and starts. But since around 20 end of 2017, when I made the mistake of selling Bitcoin before it had that run up to almost 20,000, I haven't sold Bitcoin since then. So what that's allowed me to do is now I see my Bitcoin as like the base layer of my investment portfolio, the base layer of my net worth, right? And I don't want to sell that. I want to borrow against it. So for me personally, it has worked in 2022, 2023, 2024 to borrow against my Bitcoin to buy strategy. Right now, that has its own risks, and the risks have paid off. And I've done that with Nvidia and a couple other things. But I'm saying all of that to kind of provide a framework here. I would not advocate that someone invest in strategy over Bitcoin because, quite frankly, I don't think they're going to fully understand strategy and what they can do and what Saylor is doing long term if they do not understand Bitcoin. And I also think that someone is not going to understand strategy unless they understand financial markets and they really educate themselves on these the different tools that corporations can use, and then fully understand what the preferred offerings mean and fully understand what ATM equity offerings mean, and so on and so forth. There's a very, very steep learning curve. There's a steep learning curve for Bitcoin, and that learning curve is only steeper for strategy. Now, that said, at a very simple level, and this even plays into what we were discussing with regards to maybe corporations are going to be forced to sell their Bitcoin holdings by shareholders or the board or what have you. The whole notion of putting Bitcoin on the balance sheet is so that the corporation itself, the equity itself, can experience outperformance relative to Bitcoin, and that is the basis of my thesis of strategy. If I have one equivalent dollar that I put into Bitcoin, as long as strategy is giving me 1.1, 1.2, 1.3, whatever to that dollar, I consider that a win. And I've rotated profits that I've made off of trading options on strategy into IBIT, which I then use to play options and rotate into Bitcoin. So I've leveraged my position several different ways. But I can do that because, one, unlike most people, just because I have a certain number, I haven't stopped working. So I still have capital coming in to help me facilitate that. And also, I have not leveraged a heavy portion of my Bitcoin position. So my risk is relatively managed. That works for me. I am not saying or advocating that would work for someone else. And that is why I would say, do I think strategy is a worthwhile investment? Yes. Am I going to recommend it over Bitcoin or or something like that? No. That doesn't mean that I'm disparaging strategy. That just means that it has taken me it took me almost a decade to fully truly understand Bitcoin through and through, and that's everything from reading the white paper to understanding how Bitcoin mining works and understanding hashing and understanding how to disprove FUD against things like, oh, is quantum computing going to break Bitcoin, or all those other narratives, right? It's taken me a long time to build up that knowledge base. It will take someone that is coming into this market fresh and equally, not necessarily equally long time, but a long time relatively, to fully understand Bitcoin and strategy. If you are someone that's a financial advisor, I've had people in my DMs that are financial advisors that don't understand what strategy is doing, and they are in traditional finance and they don't understand Bitcoin. So if someone that's steeped in the markets doesn't understand Bitcoin and strategy, what does the average everyday investor that doesn't even really know anything past what they do with their savings accounts or their credit cards going to fare? You have to learn. You have to take time. So if you take the time, if you've put the work in, if you've put in the hours and you want to make the investment, absolutely do it. If you're just thinking about things in terms of number grow up, just buy some Bitcoin, forget about it for a few years, and see how you do, is my advice. Without giving advice, by the way, because not financial advice for anyone watching this.
People want the cake, but they don't want to get fat, right? So, or gain
Exactly.
weight, say more politely. So it's really interesting. And I think the real challenge for the next 10, 15 years will be to manage to keep your Bitcoin, because you will be distracted by so many different temptations, send it over there, lending, borrowing. You will be tempted to sell your asset to gain fiat to then distribute to do whatever you want. Or some platform are going to allow you to do certain things where you don't even have to sell it. You just send it to them. You lose the ownership. We see like a DeFi built on layer 2, layer 3, God knows how many layers built on Bitcoin. History has told us, FTX, BlockFi, those things have happened. And I think we will see them again in a different form. The bank doesn't have your money. It's not money and it's not yours. The bank is taking whatever it is you think is money and they're playing with it. So I think now those people, those sharks, are going to take your Bitcoin, right? And they're going to do God knows with it. So the challenge will be to be strong enough to say, I'm just going to keep it.
No, I do agree. And even in my case, the fact that I've borrowed against my Bitcoin, I have done it in a way that is very, very, very over collateralized, right? So it's not as if I have $100 in Bitcoin and I'm borrowing $75 against it. So, the reason why I was comfortable doing it is because, one, I was over collateralized. Two, I had income coming in and I had savings to cover any margin calls. And three, I wasn't doing this to buy an altcoin. I was doing it to take a leverage bet on Bitcoin and AI with NVIDIA and a couple other things, right? And to your point, that is going to be the next thing. I think that's going to be the biggest distractor, as you say, that people are not going to treat Bitcoin appropriately. They're just going to see it as a way to speculate some more. So the way I see Bitcoin is I see it as property, right? Imagine your Bitcoin as like a real estate portfolio. You don't want to do something that's going to put your house at risk, but you do want to find ways, if possible, to smartly leverage the house because it's an asset and it can give you its collateral, right? So people are going to be criticism for this in my personal life as to why I haven't bought a house yet. It's because, in my view, I have my house. It's in my digital wallet. It's on my hardware wallets. I have a few houses. That's the way I see it. And whenever I want to leverage that, I'm able to, right? So I will own a home one day, but in my view, I'm going to own a home when I can go into a bank with X number of Bitcoin and take a collateralized loan against it to buy the home. I'm not going to sell my Bitcoin. What you're pointing out is a very real risk. People are going to go further and further out on the risk curve with their Bitcoin, and they're going to end up losing it. And instead of creating a crash like it has in the past, all it's going to do is go into the hands of like Chase, Wells Fargo, BlackRock, Fidelity, so on and so forth. And they're going to love to do it. They're going to give you the money to borrow against your Bitcoin. But if you don't manage your risk, you're losing that self-sovereignty. The whole purpose of the self-sovereignty of Bitcoin is that it keeps you out of the system. And now, because Bitcoin is growing, it allows us to participate in the system with the ability to have managed risk. But I think, to your point, people are not going to manage that risk. And that is going to be a very, very tricky navigation point for investors. And I also think it's going to be a tricky thing to navigate for corporations as well, because I don't think these treasury companies are going to be able to survive unless they find a way to generate yield on their Bitcoin. I don't think they're going to be able to survive unless they find ways to acquire Bitcoin in ways that generates yield, because as a corporation, the valuation of their equity is going to be dependent upon several things. And I think what we're seeing right now is the market is very aware. Okay, buy Bitcoin, your volatility goes up, stock price goes up. That's great. What's next? I think that's what we're seeing right now. And I think what's next is perhaps, and again, this is not me saying that this is going to happen. What if Strategy decides to spool up their own Lightning network that they can provide liquidity for? What if they decide to perhaps help the Liquid network? That's something that Adam Bach has worked on, and it's essentially Lightning for corporations. What if they decide to say, BlackRock, if we put X number of tens of thousands or hundreds of thousands of Bitcoin in custody with you, how much yield can you give us with it by facilitating different lending products? There's all sorts of things that's going to justify higher multiples on the equity. But again, managed risk. I don't think we're going to see an FTX-like situation, but I do think what we're going to see is Bitcoin is going to create an entirely different lending model that's based on collateralization. And it's going to take time for that to grow. And with any kind of growth comes growing pains. And I think, to your point, individuals and corporations and institutions are going to have to learn these lessons.
I think something else to consider is, I say this all the time, if we could hypothetically give everyone $1 million, like let's say Snap, like a Thanos thing, everyone has $1 million. In 6 months, they're going to end up in the hands of a few. People are going to buy easily, right? Because people are going to buy liabilities instead of assets. It goes with the same sentiment like you painted in the beginning. Whoever has gone in and bought at 120, now they're freaking out. They see 100,000 and whatever it is now, 9 or 8, they're freaking out because they don't know what they bought. They've never experienced a bear market. They never experienced a correction for what it's worth. And their friends are saying, oh, it's going to zero. Twitter is going in this bearish mode.
I think we're in the middle of a bear market right now with what's going on Twitter. It's ridiculous.
Exactly. So the whole thing is designed to collect from you, right? So build a shield, educate yourself, because the only thing you can truly own besides your body is Bitcoin, as far as I'm concerned. Because I've seen many friends in Dubai, whatever nationality, whenever there is a conflict, things they thought they had have been confiscated in no time.
You are not a homeowner, you're a land renter. So what I mean by that is even when the house is paid off in the vast majority of countries, you have to pay property tax, right? So you paid off your house. If you don't pay your property taxes, what do you think happens to the home? Confiscated. So you're not a homeowner, you're a land renter, one way or another. And that is why I personally, even though it'll be relatively straightforward for me to afford a home, the reason why I haven't done it is because I do not want to do it in a way that forces me to sell Bitcoin. And I also, Bitcoin has changed my relationship with money. I'm very, very reluctant to take out a loan of any kind. Even though I took out a loan to buy the assets like Strategy and NVIDIA and whatnot, the market still isn't at a place where I can get favorable conditions to use my Bitcoin to buy a house, right? So there's many things that I'm thinking through, and that's part of the reason. That's the only reason why I've built up like an IBIT position, for instance, and a strategy position, is because I've been using that. I trade options and I buy Bitcoin with it and I put it into cold storage. The reason why I'm both excited and concerned for this future that you mentioned with regards to lending is that I'm looking forward to the day when I can walk into Chase with my Bitcoin holdings or with my IBIT holdings. And you can do it. You can do it today to some degree, but to say that I have X amount of dollars, I want a loan for X amount of dollars over the course of a period of time with X interest rate, and I can do that with my Bitcoin, right? Or with IBIT cleanly. I think that is going to be an exciting future, but I also think, to your point, you're going to have people that and I even think this is possible with people that have been in this space for a long time. You're going to have people that probably have millions of dollars in Bitcoin and decide to buy a house worth millions of dollars. And then if we see a 20, 30% correction, all of a sudden they have a situation where they can lose their home or they can lose their Bitcoin, and in some cases end up losing both. That is something that is definitely 100% coming. I think I'll navigate it fairly cleanly. I think that perhaps you can as well. But to your point, it's the same kind of game that's just being played with a different kind of asset. Eventually, you're going to have a small percentage of people that really hold their Bitcoin for the long term and they pass it down through the generations. But unfortunately, it's going to end up in the hands of a lot of big players in many, many different instances. And I don't think that represents a failure in Bitcoin. I think that just represents that Bitcoin has become what it was intended to become. The world agrees that it's the best asset. And because the world agrees it's the best asset, everyone in the world is going to want to get it any way that they can.
Old school greed and fear, they always play the game, right? So guys, be mindful. And by the way, take 2 seconds, check in the description box. You will find Adrian's Twitter account. Go and give him a follow because Adrian, honestly, you are an absolute legend. I really appreciate having you on the show. Thank you so much.
Thank you for having me, and I would love to come on again anytime.
We'll definitely make it happen. And guys, thank you so much for watching. We'll see you on the next one.